definition.
From the Tri-State's first high-def station, this is Good Morning Tri-State.
Do you worry about being audited by the IRS? Maybe you have a lot of deductions, or you run your own business and fear the IRS may challenge your return. Taking a look at the economy now. CPA Bill Hesch is here with some helpful tips to avoid being audited, or if you are, how to survive it. Good morning, Bill. Welcome back.
Good morning, Janelle. It's great to be here again.
You say the first thing to think about is documentation.
Absolutely. I think the IRS is just looking for documentation of your receipts. So when you claim a business expense, as long as you have the documentation, I've been to many IRS audits and they readily accept your documentation if it's proper and it's adequate.
You named 3 things as well that you say that really should be part of the documents as far as like receipts and things like that.
Right. In the documentation, you need the date, so you know it's in the tax year that you're claiming the deduction, the dollar amount, and then also the business purpose, so that the receipt should somehow document that it is an appropriate expense on your tax return. For example, credit card statements are not acceptable as receipts. You actually need the receipt that supports the credit card statement.
Wow, so you can't just rely and say, oh, I charged it, it's there.
Well, and I recommend for clients that have business expenses, they have an envelope and just keep the receipts in the envelope each month. Just put them there, you know you got it, and don't forget to keep your receipts.
You've also got some tips about business car expenses.
Yeah, business car expenses, you are allowed to deduct your business mileage. This year it's 55 cents a mile for your business miles, but you are required to keep a log or some type of record to show how many business miles did you have, how many personal miles did you have. There are 2 methods to compute your expenses, either the per mileage method or you can use the actual expense method. So if you have actual expenses, you really do need to keep all those other receipts.
What about home office?
Well, the home office is something that some people say, gee, I don't want to claim a home office, it might get me an IRS audit. That really is more of a myth than reality. My clients take the home office deduction on a regular basis, and again, it has to be reasonable. And that's the thing I mentioned too, that if you're trying to be afraid of an IRS audit, be reasonable, and you really don't have anything to worry about. Also too, you take client meetings. You really need to note that time frame too. Well, that's what's really interesting when you have entertainment expenses at a client meeting, which really, what most people don't know, if your expense is under $75, which is usually a lot of people don't spend more than $75 for lunch or a meal. You don't need a receipt. You just need to have documentation of the date, the place, and the person you met with, which typically is your calendar. And so that's kind of interesting that most people don't realize they don't need a receipt if the meal is under $75.
Wow, I didn't know that either. But what about the tax alert?
Yeah, well, the tax alert, I think that you really want to be careful when you're filing your tax return to make sure everything is as accurate as you can, and you don't need to worry about the IRS auditing you as long as you really have kind of followed the rules that are on the tax instructions. That can sometimes help clients a lot, that you don't need to be worried that much about, am I going to be audited by the IRS. The IRS actually publishes different numbers that document what reasonable people are claiming on their tax returns, so you can double check those numbers.
Always good to double check. Well, thank you so much, Bill. We'll appreciate it.
Glad to be here.
And to read more about Bill's suggestions, just go to WCPO.com. Once you get there, click on 9 links. It's there for you this morning.